Welcome everyone to the Kendall Report. Well, it is Tuesday night and we had quite the day yesterday. Talk about panic buying. I've never seen anything like this for quite some while. And I'm going to try to unpack what I was seeing today. There's a couple things. We're going to look at some intraday charts. There was a pattern that kept emerging all day long that I think was significant. And I think it was the machines, but they were turned on full. So before I get into tonight's video, make sure you subscribe, hit that like button. There's about 120, 30 on you. I want to say 130 likes here right now. I was thinking about threatening I wouldn't go on unless you hit the like button, but just hit the like button, okay? Remember also to hit the notification bell so you know when I come live every night. So folks, really, you know, that was very impressive to say the least from the standpoint of the relentlessness of the rally that we saw yesterday. When I show you the stats coming out of the database, it's mind-boggling. And I talked to you about something yesterday that there was no way with the kind of traction that we're getting that with the database that was going to be wrong. I'm telling you, the database isn't 100% right out of every trade that's in there. About around 60% of the trades actually end up to be profitable, believe it or not. Those of you that have Wavetech, then you know. And I'll tell you one thing right now, if the call over the last couple of days and the patterns that I've been talking about over the last couple of weeks going through these PPMs didn't convince you to buy these indicators, then nothing will. I'm just telling you, get these indicators because there were tons of trades. And I will show you how many trades here in just a minute. When I go through the Wavetech database, what that's doing is combining a whole lot of the information is coming from PPMs and market grid and some probability maps, all kinds of stuff. I talk about this angle of attack, all that stuff is in there, but you can get these tools, so get them, please. I mean, you're crazy, I think, not to have them. Those of you that have them, make a comment and tell these folks to step up because there was a lot of money on the table that I said, okay, so you watched my YouTube video and I told you that this was going to happen. But I'm telling you right now that the patterns that I saw intraday, they were just relentless. It looked like, I would say 5 or 6 times it looked like the market was going to roll over, and then this pattern emerged again. And it was almost the exact percentage of retracement that happened each time. And it basically paused yesterday at R1, it paused at R2, R3, and then RXT, it went right through it at the end of the day. And we did get an RXT sell signal on these indices, and we're higher right now, but I'd be very suspect. And the title of this video is, you know, basically, is this a one-day wonder? And we printed at overnight right now on the S&P, and I'll show you in the technical section here in a few minutes. We've already printed above that 39.48 high. So we've done that. And a lot of times we'll get up above that level and get a rejection. We're trading 39.55 as I speak. I'm just looking at the futures here. But let's, you know, housing came in, it missed. No one cared about the negative numbers. And I'll tell you, there was a report that came out, the Bank of America Merrill Lynch manager survey showed that the managers out there, these so-called professional managers, had the lowest investment exposure that they've had since Lehman Brothers in 2008. If that wasn't bullish, I don't know what was. And I've been telling you that a lot of these guys that are out there, man, they were just continuing to try to talk down the markets, and everybody was bearish. And there was something else that happened, and I'm going to cover the Dow tonight because I think that is significant because everybody is talking about the Dow. Every earnings report. Turn on Bloomberg. I haven't watched CNBC, but you turn on Bloomberg, everything's about the Dow and all their analysis. Well, the strong Dow. On the 17th, and I'll show you here in a minute when I go through the Dow on the 17th, I got a cycle. I put it out on Twitter that day, said there's a cycle high due that day. It was the high of this market. I've been talking about, markets, Dow going to higher prices. I'll cover all that here in just a few minutes. But we saw basically rates rebound, oil came back in a little bit, but everything's still locked in the ranges that I talked about last night. So in theory, nothing changed from the standpoint of the yield curve or the position of the inversion and all that stuff. All of a sudden, nothing mattered. And when we get this stampede market, there's so many new players in the markets. There was just wave after wave after wave of buying. It was very interesting. I haven't seen one as strong as this for a while. Let me just look, and I think a lot of this was short covering. And as I've said before, I'll mention this when I bring the screens up. But you can. One of the best indicators is to sell when the VIX is at 20 and buy at 31. So we'll take a look at that in a little bit here. Just looking at my notes to make sure that I am covering everything. Yeah, there was all 11 sectors were up yesterday. There was nobody left behind. And I will show you in the database what's happening there as well. On the short-term database, there was a lot of new sector buys. And yesterday, the advanced decline line, which I don't look at that much, but it was 5-1 to the upside. And I know that from experience that a lot of times you get this exuberance at this level that the market's going to want to come back in a little ways. We still have a pretty good bid overnight. We'll see how London comes in and see what's going on. It's a little warm over there in London, so maybe they'll sell some U.S. stock to cool down. I'm just looking at all my notes. So let's talk just a couple things. Housing is coming out tomorrow, I believe, at 1.559. All these housing numbers are missing. So the housing market's definitely rolling over. Mortgages expected to be down 1.7. New home sales everything's expected to be down. Everything that came out on housing today was down, and we're just going to continue to see this implosion. So from the standpoint of what's going on economically, not a thing changed. Just remember that, okay? Keep that thought. But I have been talking about going back to the final week of June. I was talking about as we come into this Q3, we're going to see a rebound, but it's not going to be a straight line. This was certainly a very interesting day to talk about. So let's go ahead and take a look at the database, and I'll show you what I'm talking about here. So here's the numbers, folks. How about 72.5% bullish? Yesterday, we were at 55. We had 7,015 buy signals between the two models, only 81 sells. And I'm going to go full screen here for a second, so I can show you a little bit more of this screen. And what's here is you'll see right now there's four sectors that are long. We've been long: consumer cyclical, healthcare, services, and technology. That's what's there for right now. If I toggle down, it says market buy position. So this is for tomorrow. Basic materials, capital goods, conglomerates, financials, transportation, utilities. So now we're going to be long 10 of the 11 sectors that are out there. So all of a sudden we went from this, a couple sectors long. Now this is short-term stuff. So the holding periods, as I mentioned to you the other day, is around 40 to 55 days. So it can rotate and extend. What I'm really looking for, if we hold these prices together, hey, it's Tuesday night, right? So if we hold the prices together coming into this coming Friday, there's finally a chance that we're going to see some positive rotation coming in on the intermediates, and then that will be a sign that there's much more in this market than what we've seen so far. But for the moment, I wouldn't be surprised if we just hit a wall. We probably retrace. I'll show you here where we are on the technicals in a minute. I think we're far enough down on the number of bars in the pattern that we're going to see something set up here that is probably going to be a little bit of contra trend, because everybody got bullish today. If you turn on any of the stations, it was comical actually that everybody, if you went back 1 week, actually 2 days, right? You go back to last Friday, last Thursday, and you look at what everybody was saying on all of these channels, it was, the stronger Dow, the story. It was absolutely negative, negative, negative. We got a long ways to go. All of a sudden, these people are all jumping in. It's got to be really pretty hilarious. I actually wish I had watched the halftime report, because those guys are just about always wrong. And I would love to see that Steve guy that's the perma bear. He's the only one guy on there. So it must have been a party on CNBC today for sure. You can actually look at the screen, have the sound off, and see if it's an up day or down day without seeing the numbers by looking at the actors that are on the screen, whether they're smiling or if they're really serious. So these numbers that are happening out there. I'll be talking about how the sectors rotate. We've got new ideas coming in right now. The things that are working in consumer cyclical and healthcare are actually not. Services are this other strong sector, and then technology. So those are the short-term rotation. We'll see this new stuff that comes in, what starts to rotate there. And those of you using Wavetech, make sure you watch these sectors here so that you know what's rotating in each one of those sectors. So you can click on a sector and see all the new buys for that sector as well, and on all the industry groups. So you can break it all the way down from top down. So you have sector and the industry groups, and you can see every symbol in that database that is in that realm of those sectors and groups, and that'll tell you what stocks are to look at and kind of focus you in on what's going on. But there's a ton of them. Just to remind you, 7,015 new buy signals out yesterday. I forget actually I can tell you the numbers. Let me just look here real quick. Yesterday we had 1,301, and the previous day, I'm just looking here on Sunday, we actually had more sells than we did buys on Monday. So this thing has got good solid traction yesterday, and today is absolutely insane. And a lot of times you're going to get those pops in these stocks, and you get a 2 to 3 day pullback before they go. I will show you in the technicals what the numbers are out there and what to expect, especially since we basically got RTXL signals across the board. And I'll explain that as well, especially if you're new to this channel. Okay, so first market we'll cover is the S&P. Like I said, we're up 20, 39.57 right now. So we're continuing to see this market move higher in this pattern. And the high so far this evening is 39.59.25. We're printing 57.50 on the S&P. And also remember, yesterday I told you that there was a cycle low coming in. That was key. I mentioned the cycle high in the Dow on the 17th, and we got a cycle low yesterday. So those of you who have the indicators, you should have seen a spot for the cycle lows on that today. on the S&P on the daily charts. But yeah, as we look at this, it's pretty phenomenal. And the other thing I want to point out is we're into the 5th day up in this pattern, counting today. So it's likely that we're going to see somewhat of a maybe a 5-3-5 pattern, something like that. Let me bring this over on the chart so you can see what's going on here from the market grid viewpoint. So market grid R1 is 39.60. So we have basically satisfied R1. So R1, S1 is 39.14. And I'm going to show you this intraday chart here in a minute, but this is definitely a pretty significant number. We traded down to 14.12 and bounced out of there twice in the intraday session yesterday. And I'll show you that pattern here in a minute that kept unfolding. Hopefully I can get it blown up enough so you can see it on the screen well enough. But this was a very unique pattern. I've seen the pattern before, but I haven't seen it repeat itself as many times as it did yesterday. And every time like I said, it looked like there was going to be a little correction intraday. It would do this pattern, and then it was a continuation pattern, and there were multiple times it did that during the day. But I want you to notice something here. Now, here we are up 19. Look at all the PPMs. They're turning down. They're not expanding. So there's an argument here that this pattern, since we stopped calculating the Fibonacci patterns, we could actually stall right in here, right at this old high. Like I said, if I go back to this day here, which was 6/27, we had a high of 39.48. We've had a high tonight at 39.59, so we printed above that. If we fail to close above that level, we're probably going to see at least a couple of days down. And this STX sell signal that we get, what that really means is that typically you'll come into at least an S1, S2 the next day. So that would be pull back to 14, 39.14, potential for a 38.88 handle to trade. And that's what I would be looking for. If they extend, I guess we could go R2, volatility so high, but we're sitting here right now, and I've said this a lot overnight, that it's very possible that we're printing the possible high of the session right now overnight. We'll see how we come in, but the range expectations are on your screen here. Would be an R2 would be a max. That's 39.86. That's somewhat far-fetched. That's another 40 handles up. That would be pushing 1.25% after yesterday. I didn't mention these numbers earlier, but yesterday we did have the S&P up. Let me get the right numbers on the screen here. But we did have the S&P was up 2.76. The Nasdaq was up 3.11, and the Russel up 3.5. So this was just a crazy rally. But this pattern is setting up. It's interesting that we're not, after this big breakout, big surge, that we're not seeing acceleration in the PPMs. We did see multiple signals coming out of here. We got the cycle. We had a lot of stuff pointing to this. I remember talking about there was no way to be bearish in this sideways pattern that we've been in. And I'm not really bearish right now, but I would be very, very cautious and somewhat suspect of this rally at these levels. Because like I said, they printed up to, I'll just bring that on screen again so you can see it. Then we'll go through this intraday chart real quick. But this number here is right now 39.60 is R1. So continue to watch that. If we print through it, not that big a deal, but it's not very likely that after yesterday, that being up 105 plus handles, that we're going to get another 50 handle a day. I think that's a little big an expectation. And if you're sitting there saying I missed the rally yesterday, and do you really want to buy 39.57 right now? Maybe you do. Somebody does, right? They're trading them here. So, but I think that the conviction level at this is a little more skittish than it was earlier today when they're going. So let me show you this pattern that I'm talking about here. So this is just a 5-minute chart, and this is the what I call the Wavetech webs, and these are some great pattern recognition tools. But this is the pattern that kept happening. We get this spike, and we get these little rolling patterns, and then the market would start up. And here's another one right here. I wish I had a good drawing tool for Windows 11. Anybody out there has a good drawing tool for Windows 11, please drop it in the comment line for me. I've got EpiPen. It's junk. I don't like it. But anyway, this pattern here, we finally got into the end of the day, and now we're seeing this what I call a double pattern, and now we've moved higher into this pattern right now where we're trading right now. We're trading 57, but this pattern just kept evolving. It would come up, it would peak out, go sideways, it'd come into the webs, it'd do it again, come into the webs, and we kept getting these reversal patterns. There was a 5-minute reversal at the bottom of every one of these. The scaling is kind of hard to really put it together and see it. I'm just trying to see if I get excuse me, get some scaling that would show it. And it was just these little jogs, and we went sideways for a while, but it kept doing this pattern. And when you're watching the level 2 trade, it looked very much like it was very machine driven. It was very methodical. And every time that the market would get down to about 15 to 18 handles off the last high, you'd see this big 5-minute reversal take off. Within 10 minutes, it was making a new high and making a new run. And there's something we talk about in the webs called a rope. It would form a new rope. It'd get up to a next resistance point, and it literally stalled at R2, R3. And when it got to STX, it just went straight through. It hesitated. There was about a 15-point reversal in that off of that RTX number, but then it came right back, and then that reversal happened, and we rallied right into the close. I started to tweet out that, the machines have been buying all day, and they're still buying on the close, and we still have lots of buying going on. So looking at the Asia opening, everybody's excited. All of a sudden, the bottom is in, and all that stuff is happening. So we'll see how this thing trades over the next couple of days. My expectation would be that we had 5 days up, that we'll probably get some sideways to down for 3 days. And that would put us, this would be Wednesday, Thursday, right into Friday. And as long as we hold over a certain level, then I think we could get that traction on the database that I was talking about. So let's take a look at the Nasdaq next. Nasdaq numbers are very similar. We did get a new calc coming out of the Nasdaq. Let me bring this over on screen so you can see this. This is daily. And we had some new high targets, 12,339, and basically have traded just about up to that overnight. 12,667 and 12,870. Those are new objectives that just started calculating, but same scenarios happening, same configuration on these PPMs. Is they're all flattening on PPM 1, PPM 2 is turned down. We are at trend mode though on the S&P, and we're at 0.39, 0.31, and the PPM 3 is somewhat flat, but they're already dropping off in spite of, we're looking at the NASDAQ up a 0.56 right now in the futures. And the PPMs are yawning at this from a momentum standpoint. And while it looks good on the screen, I would just say that when the PPMs do this, that's a warning sign. So I'm going to be a little cautious coming into today. If you caught this thing and they open them higher in the morning, be looking maybe to take some profits and step back a little bit. Is this a runaway market? I've been talking about overall going up to maybe the 200-day moving average, which is way up at 14,248 right now on the Nasdaq. I didn't mention the numbers in the S&P, but the bottom line is that is going to take a while. So that is something that's going to unfold in multiple weeks, not just in a few days, right? So this is going to be, we've got 5 up, we'll see. Sometimes it'll extend into an 8, and you get an 8-5-8 pattern, which is a very bullish pattern. I'm a bar counter, so I'm going to be looking at all of those numbers as we go through the next several days to figure out what's next in this pattern. But for right now, just be cautious and looking at how these PPMs are reacting. So next market we'll look at is the Russel. So Russel was very strong yesterday. We're looking at 3.5%. I was talking about the overall configuration here from the standpoint of how these indicators are looking. They're a little bit stronger. Look at PPM1 PPM1 is at 0.46, 0.32 on PPM2. It's down ticking. PPM3 is down ticking, but PPM1 is still a little stronger. This is the RTY, so this is the Russell futures we're looking at, and we still have these patterns are still active here. 1834, 1890, 1930 as a projection. So we're getting pretty close to that 1834 level. We printed an 1810 overnight, so watch for some kind of rejection somewhere around that area on this as well. But it looks to me that this pattern is trying to at least set maybe some more consolidation. There's something else that happened here, and I didn't look at this on the other indexes, but the market grid has squared off. And when you look at that, when it goes into what I call a box formation, typically we get into a sideways range. And you see we're squared off here in this. So I'm very quickly, I'm going to go backwards for a second. I want to click on Nasdaq is squared off, and so is the S&P. So all of the indexes have the same pattern on the grid where they're squared off. Typically means consolidation before any higher moves going up. And the other thing I would just put out there before we finish on the indexes, the other thing I would put out there is that when we get this kind of crazy buying where we get 7,000, we move the percent bullish up to 75% like we did, and that's all happened. That hasn't happened yet. That's for tomorrow's opening, right? So that duration, when I was looking at the duration, we're still very short-lived in the duration of these signals, and all these new signals are going to drop that down. We might only be on a relative basis as a batch in all of the database looking at those metrics. We may only be in maybe 4 or 5 days of the 39 days that are expected on average, right? So there is still another 30 days. So we could go, maybe we have 5 up, could extend it to 8, but we get 5, get a 3 and an 8. Then we go through another, then maybe go through a larger correction phase. All of a sudden you're 20, 25 days down the road by the time you finish that. There's one more run, and then the party's over. So that's the way, but it can rotate because we can get some rotation in there. And this is pretty robust. And I talked about this just 2 nights ago. I'm still back on the database, but tying it all together with the indexes. And what happens when we see this type of traction is it's material, but it also is at peak levels. So somewhere between 72 and 78 is a typical peak level. Now, back in 2020 and some of the crazy volatility that we've seen over the last couple of years, we've seen that bullish percent raise up into actually a 90% range. I've seen 92s out of this back in 2020, but we were at net zero really at that time, and everything came back on so fast, it really jogged the database substantially. So, but these are really material numbers. This suggests that there's some serious traction here on a lot of symbols, right? We just have 7,000 of them as we talk about right now. Let me just look and see what the total symbols long now on the daily is. 11,739 symbols long of the 16,150. So this is a very big number, and it's material, and it means something. Okay, you can look at indexes and draw lines and charts and study indexes all day long. You're not going to get that perspective any other way than being able to look at 16,000 individual symbols. Now those encompass anything from mutual funds, ETFs, and individual stocks. And it could be bond funds, bond ETFs, it could be equities. Everything's in that basket, and it's broken down by sector. But the reason why I go into this is substantial amount of traction. There's something real going on here, and it's probably going to carry us at least through the quarter, and there might be more to it. I have been one of those people that have said, there's no way we're sitting here and the market's going to recover and we're going to make an all-time new high just from where we were. But the way the markets are set up, as ridiculous as everybody got bearish here, I was told by somebody I was talking to a number 2-3 weeks ago that I'm the only guy that thinks there's a bottom here. And I thought, I like being by myself. I like having that stigma that I'm one of the few guys that thinks the market's bottoming. And I'm not a perma bear or bull. I'm going with the flow of these things. So I just wanted to unpack that a little bit, because just so, especially if you're new on the channel, so you have a perspective of what we're doing here, and not just looking at technicals on these indexes, but looking at this broader picture, but looking at literally being able to count every piece of hay in the haystack and being able to evaluate it. So 75% is material. I think I sunk my putt. So let's go ahead on and take a look. We're going to do interest rates, and then we'll go to the dollar, okay? Okay, so I have the 10-year up here daily, and we're right into some of that resistance that I talked about yesterday. But I also was pointing out that we're starting to get these PPMs to turn up here. And I'm just trying to get to my notes here, is one of the things that I did notice, and I drew in, I'm not set up to do the drawing like I did on the yield curve the other day, but right now we've got the 2-year at 324, the 5 years 315, the 10-year here that I've got on the screen is 302, and then the 30-year is 318. So the lowest one, there's been some buying coming in for several days, and it's now turned to some selling, but there's been some buying coming in just in that 10-year area. Folks have been stepping into that, and that's why we traded down the other day to, let me just get that number. We traded down to, trying to get through 290, 289. I'm just looking at these lows in this pattern. And last week we got down to 278, and that was an extreme. And we also had some potential Fibonacci targets that I was talking about as well. But because of these PPMs all turning up, it's starting to look like yields could start to rise again. And whether that's going to and I'm going to tie this together with the Dow here in a minute. So we're looking at a pretty bullish setup here on the PPM. So it looks like yields want to rise again. And I'll go into more detail on Sunday night with the weekly charts. But for right now, I'll stick with the short-term charts. We did see some flattening yesterday in some of the securities, and that's why I brought up these numbers as far as what's going on here. We do have more of an inversion than I gave it credit for the other day with this 324, so 2-year 324, 315, 302, 318. So if anything, it's inverted, but it's flat. It's almost 100% flat. So a flat yield curve has different inferences than anything else. And if you do want to read a good book on that, it's an old book back from, I think, 1978 or 80. It's called The Complete Bond Book by David Darst. That's a good one. You can also look at the I think it's called the Manual for Bond and Money Markets. It was also written around the same time. Darst is still around, but he's turned into some pie chart ideologue in the world. But when he was younger, he did some amazing work 40 years ago. I think he was in his early 20s when he wrote these books. They're pretty brilliant. It was one of my introduction to the world. So maybe if I think about it, we'll get that into the description down below on this video. But this 10-year is starting to turn up. I think there's somewhat of a peak here. We do have some Fibonacci upside targets here. We're looking at high target 1, 2, 3, high target 2, 308. We printed up to 304 yesterday, 308, 315. I mentioned some of these numbers. I don't see us getting above there. The 316 level, I think, is a ceiling here. And like I said, I'll go into more detail depending on what happens here. I know it's Tuesday night, so maybe yet this week, but I'm kind of focusing on that longer term stuff as we come into Sunday. So next we'll go into the dollar, and right here where I have my cursor, this is the 714. I think I said, yeah, 714 was a cycle high, and that was a key level from the standpoint of the dollar. We almost hit some of these Fibonacci targets. The Fibonacci targets was 108.16. So we printed up into 109, hand of 109.88 was it. There was a 111, which is 110.93 that was out there. And I'm thinking at the moment that we're probably not going to get to that level. We'll see if we can hold this 21 period moving average right now is coming in at 106 on the dollar, pretty much where we're trading right now. And, you know, I had talked in the past about the disaster that was setting up in the yen. The yen peaked out just about 139.80, I think was rough numbers there. And now it's coming back in as well. And everything's starting to feel a little different. But the reason why I want to talk about the dollar for a few more minutes is that one of the things that happened from the standpoint of just looking at the talking heads and the people out there, that everybody, like I said, every earnings report coming out, they're talking about the strong dollar, the strong dollar, the strong dollar. So it's got to be pretty close to not being the strong dollar anymore. There's so many people talking about it. It's sort of like, it's one of those key words that you see out in the world that everybody repeats the same thing over and over. And you almost know then it's even a false narrative, or there's something that is probably not right with that number. Everybody's talking about the strong dollar. And just listen to the earnings. If you watch any earnings reports or you see some of the dialogue that's being released, you're going to hear about the strong dollar. And now what you're hearing is the dollar has paused. Okay, everybody was, the other day the euro printed under parity, and you thought, I mentioned this, I know, on the channel here just a couple of days ago, is that when that happened, everybody was screaming like the end of the world was there. Oh no, the euro's under parity. And one of the things I just tie this in right here with the Dow is we have the Bank of Japan, and we do have European Central Bank. The ECB is also going to be taking some actions this week. Japan's the only one that are kind of loosening, and for the first time, I think in a decade or something, the ECB is supposed to raise rates, and they're raising rates in a different kind of environment than what we are. We, meaning the U.S. Federal Reserve, they're raising rates in a much weaker backdrop from the economy. So it's going to be interesting that this inflation thing is, I guess, the overreaction of all these central banks. And now they've decided they have to do this. And so they're going to go ahead with it, and they're going to push it on. I mean, next week we get the Fed again, right? We're looking at 0.75 increase. So we've got some interesting things coming on. When does that dialogue come in? Do people start to play up that, hey, maybe we're only going to get 0.5? It's, things are getting, but if things are getting better all of a sudden and they still have inflation, better meaning the market's rallied, then look for them to do more. They're going to be, I think, stay fairly aggressive, just to mention the Fed here for a minute. But this is stuff to be watching as we see the markets unfold as we go forward here. Okay, so next we'll look at the crude oil. This is also the place you're going to hear about the dialogue in crude. And so the strong dollar is going to be also being mentioned a lot around crude. We're at 101. Yesterday we did see a move up to about 101 and change. We're trading 100.33 right now. We've been as high as 155.99.79. I've been covering this in fair detail here. So looking at 97 to 104 is kind of the peak here from the standpoint of what to be expected with crude oil. Now the PPMs are stalling, and that means we're probably just going into this box formation, just like I talked about here in the indices on the stock market, on the equity indices. We've got this little box formation here. Everything looks like it wants to go into a few-day consolidation before the next decision is made. Next market, I've got daily gold up here, and I covered, this is just a terribly quiet market, and of course all the declines have been about the Dow again. Dow. That's all we're seeing. Now we're seeing PPM 1 really start to turn around here, and the 1721 level is going to be your pivot. So if we get above that, then you're probably going to move up towards 1740, maybe 1760 level. In that range will be your next move up. And as long as the Dow stays in check, doesn't make a new high, all that, they're probably going to find a reason to buy some gold here. I don't see it as being a really bullish market, but I've been talking about this. We did have a weekly cycle low coming in right now, so this week, so that is also on the plate as far as the technicals go. And then also you're seeing PPMs on a short term start to click up. Let's just bring the weekly up really quick. So you'll see here's a spot, and in the trade station, so if you have the trading view numbers, you won't see the actual spot until you get the next day, until you get that day to open. This actually warned you the day before or the week before. So this week is a cycle low. We had a cycle high going back over here when we were at 1880. We had a cycle high on 617. So now we got another cycle coming in here. These cycles are fairly prevalent in this pattern here on a weekly. So expect to see this thing maybe start to bottom here, and we continue to hover around the 200-day, sorry, this is 200-week moving average. Okay, so the final market we'll cover tonight is Bitcoin. I've been talking about this number, folks, coming up towards, this is the weekly, toward the 24,266. We're trading 23,463. We're up 7%. This is right into that range we're getting into. But look at the PPMs. They're really starting to cross over on PPM on the first and second derivative. We still don't have 3 coming in yet, but that's okay. If we can get PPM 1, it's a minus 2.74. If coming into next week or the following week we get a positive, then we've got a shot at moving up toward, I'm going to call 27 to 32 range on the upside. And I've been going on and on for weeks about this sideways pattern that we've been in, and it hovering just below the 200 days. So the 200 week. The 200 week is at right now, that number is 22,705. So we've been trading under it. First time we've been above it. It's Tuesday. We got a lot of week ahead of us to get a close above that. But the PPMs are really looking, I think, very, I would say very positive. And this is, since it is an intermediate, if we can maintain this for probably 2 more weeks, we're probably ultimately going to head up toward the 21-week moving average. And this is probably another market that's been talked down. Anytime Bitcoin gets down on its back, everybody starts talking about it being a scam, and you know the rhetoric out there. And it's a substantial market. It's got a lot of market cap here. This is not. It's long beyond some kind of scam deal here. So what we are seeing, though, is a lot of cash flow coming around this. And I know I've heard some rumors about some of the big whales coming in around this thing again, especially when it was trading 19,000, and I think we printed 18 and change. Let me just see what the low was here. Yeah, 18. What, a month ago we printed 18,635. That's I know all these exchanges have slightly different numbers, but that's where this thing got to. And that was an opportunity. There was some bogus numbers out there and projections that I told you I didn't think I mentioned, but I didn't think we'd get to. And down at those levels were pretty much the extreme that it appeared that the pattern would set up, and it should hold. Okay, folks, this is going to do it. Make sure above my head, get the indicators, get set up, and we're still doing the live room offer, so you can get into the live room. And for those of you in the live room, 1 o'clock tomorrow we'll be there, and I will see you then. And thank you so much for watching. Remember to subscribe before you leave, hit the like button. And I'm going to be really disappointed by everybody who watched this video if you made it this far and didn't hit the like button. And there's at least 1,000, 1,200 plus. I mean, we should easily get that. It should be a lot more. Anyway, folks, thanks for watching. I appreciate it. We'll have a good day trading tomorrow. We'll see you in the live room.